In a land and time of GameStop pump and dump schemes, roaring kitty social media bonanzas, and Italian Irish fuckers just trying to fucking bother me when I'm doing the intro. Welcome to Trash Trades, the place, your
Trash trades.
one-stop shop to absolutely learn how to blow your port and perhaps reverse engineer what we do and not. We trying to figure it out. Yeah, when I say we, that's me and Luca. He forgets to tell you guys I'm in the show. That's okay. But every time I watch one, I notice I have no words.
Every time VJ reviews an episode, he's just cut out of it as a whole.
Just been cut out.
You know, I'm
You
lucky
guys know
enough to
I'm
be
in
the
here.
powerful editor. You know, I just get, oh, I hear a VJ snip. Oh, I hear fucking VJ laughing snip. You know, I gotta purify the content, obviously.
Oh yeah, purify it. See, this is where that white Christian stuff happens, man. You know, hold it down, my brothers. What's that word you've been using lately? That's right. We don't need to talk about it. We'll absolve him. He's with me now.
Amen.
Pause. I don't know if you're Christian, how gay you've been acting, but that's all good. Anyway, guys, so we're back. We're back. You know,
How you guys
here,
doing?
you know, the shows. We've been losing. We've been winning. Actually, I've been on a bit of a losing streak thanks to just some drama and then my reactions to it. Just so childish. But you know, we gotta fucking cut some heads off and let them shits roll and just not. Just know the game is serious, man. We can't be distracted. And if it's people in your life or just random little things that you're indulging in, if you really want to make it and you're in the earlier stages, it's probably in your benefit, especially if you sort of are getting the TA and sort of getting your edge sort of straight, to just not allow negativity and distractions to get up in there. That's my little tidbit for the week. That's my
Tidbit.
tidbit to myself. We're trying to do better. Luca's in here. Who the fuck knows what he's doing? He shows up. He fucking does something. Oh, the guy distracted me from a 232-point trade this morning to tell me that he fucking got some shirts. Luca, how are you doing, bud?
I'm good, man. You know, this morning was quite a morning. I decided to take the day off. So you know, if there's one man to annoy, it's yours truly. So there you go. So
I'll list the market open to let us know that you met the Prime Minister of his country.
mhm.
Congratulations.
Thank
and
you.
then was buying some shirts. And I looked over for the shirts. There goes my entry. It's on me, but also he not helping. And he's just
And
one of the distractions I'm going to have to eliminate. No problem. Probably be our last show right now.
you know what? Episode 54. And guess what? If you guys want to fucking, I'm a do some editing magic. Obviously, cut VJ out, whatever the fuck. But on the screen right now, in like 5 seconds, there's gonna be a picture of me and the Prime Minister of Ireland, or the Taoiseach called Simon Harris. So you ready? You want to see me? Face reveal, everything. Trash trade, 3, 2, 1, boom.
I hope this is dick.
That's me shaking his hand. Look how hot I look. And there you go. So anyway, that's me and Simon Harris. I had a very productive day today. A bit of shopping.
Self-promotion. Self-promotion and probably going to get himself killed. I can't believe I'm going to just fucking come visit you in Europe once. And we're going to be hunted down because of that stupid-ass picture.
Yeah, maybe.
God bless. Hey, God bless the Prime Minister and this fucking twink.
Yep.
Stay in the bathtub where you're fucking safe. And you know, on that note, roll the goddamn intro.
Order filled.
Damn. Not even asking how I am, Beach, huh? Rolling straight into
bro, did you ask me? Have you ever asked me in any of the shows?
I thought we flipped the script there. Only real ones know that joke from last episode. Last episode, you know, only real ones know. You're going to have to watch the last episode just to understand the inside jokes, the inside playings of me and VJ's relationship. You want to do that? You know what we should do? We should do a Trash Trades Plus, which is trash trades but adult content, and it should be snippets of me and VJ fucking. So if you guys wanna do that, you know, type in the comment sections. You never know.
No diddy, no doubt.
Anyway, you know me. I'm fucking Aikkidoing. I'm Aikido-ing this market. Like, everyone put your hands in front of you and just start fucking swiping all these fucking punches and bullets out of the way. Like, fucking stopping the bullets in the Matrix for real. Like, I'm out here karate chopping across all these charts, all these fucking candlesticks. Like, you know. So anyway, this was a great demonstration of that. Me Aikido. What about Roaring Kitty?
Aikido, you're using the force of the market to throw it? Okay. Let's
For real.
watch this guy.
You know, they actually call me Jedi Force Supreme. So
It's trash. Supreme. It's like you try to pull a movie title and like a Burger King fucking combo meal put together, and that shit was disgusting.
You know,
just go ahead and show us what you do best.
Okay. Boom. Enough of the talk. Fucking Aikido in this market. We're gonna get into the trade. So this trade was incredible.
More powerful than him. Long one.
Okay, this trade was incredible. So this was on the 5-minute time frame. I'm gonna do sort of the analysis on the 12-hour, which was a big movement down on the 12-hour. We're getting close to this 12-hour low here. At this stage, we sort of swept this 12-hour high. So I had this as my price target, basically. So I was looking for shorts. That was sort of the day. This was the hourly candle or the hourly time frame. We sort of had this low as a price target, and then you can sort of see the first couple hourly candles of the day really moving down, pushing down towards my overall higher time frame price target. So I'll go down to the 30-minute. This is the 30-minute chart. Again, very like a lot distribution, a big movement down. Right around here, very close to the price target, we actually missed it. And I tend to notice that the market does this a lot in big price targets, big like higher time frame price targets. It would just miss the price target by a couple ticks or a couple points, and then reverse for a retracement before actually hitting that price target. So I was seeing this more as failure swing. Did you say, Beach?
Yep, classic.
Absolutely.
Yep.
So this is sort of like
the relatively equal lows or highs.
Exactly. Sorry. I was gonna say the relatively equal lows, sort of that liquidity building on that low. So I had the bearish buys as, you know, the big start on the 12-hour, and then slowly bit by bit down the time frames, I decided to sort of look for an entry. So this entry was taken on the 5-minute, which was, I saw this fair value gap here. I drew a fib from this high and this low, and I saw a 618 and a fair value gap. So who knows me? Do you guys know my pooples? Do you guys know my 618 entries? If you guys do not, then you do now. Because this 618 fair value gap is sort of my model, I would say, which is I draw a fib, a OTE or area that price retraces into, and then a fair value gap or a sweep of a high. So that was more of the thoughts for my trade, and this was the candle I entered. So again, I was looking for that major low, that major price target on the 12-hour, and this is the 5-minute time frame. So I was sort of looking for more of a redistribution down, quite a fast movement downwards, not really much chop, etc. So I was looking for more of a fast-paced trade. So I'm gonna bit by bit, you guys know the drill, you know, bit by bit, I'm gonna roll the candlesticks, explain what I was thinking during the trade, and eventually how the trade plays out. So this is the first candle, which was a bit of a movement down. I thought I got a really good entry, a soupish, you know, this fair value gap. So we started moving back up into that fair value gap. Say it again, Beach.
Close position. Close position,
exactly.
Very good.
There you go. Out, re-enter. Story of my life, for real. Like, so I'm gonna.
That was our classic entry model before. Keep the losses low. Keep the wins lower.
Okay, so I'm gonna just fucking write this bullshit in here. Boom. Am I crazy? What the fuck? Is my fucking thing? Oh, opacity. Okay.
You're absolutely looking like ICT right now.
I'm such like a rookie.
That was so ICT right there.
I know. You guys gotta put on 2x for real. Yeah, I'm a bit of a fucking train viewer. Anyway, back into it. Fair value gap, more rejection. So I was still seeing wicks from this fair value gap. I wasn't seeing closing, like a closure of candles above this fair value gap. So I thought it was genuinely a somewhat valid entry for now. So a couple candles later, a push down,
Beautiful.
and engulfing
Beautiful.
back up. Again,
Not good.
rejections from that same fair value gap. I
You're
sort
good.
of
You're good.
saw that area of
You good just now?
liquidity. If you guys don't
Double
know,
down. Double
as
down.
smart money concepts or ICT concepts, a fair value gap is a area in the market where price moved very aggressively, leaving limit orders. So at times, price retraces into these areas, they refill these limit orders, and then continues on in the normal direction for the day. So a couple candles
Double
later,
down. Add when you're up.
again, no trims. Any trims? Absolutely not.
No, add when you're up. Add when you're up. I thought the
Exactly.
risk
Add
was
one I'm up. I should have fucking added
you're
one
adding.
right here at the tippy top and just
You should have
fucking
been adding every candle, to be honest.
exactly. You're right. And kept on adding and kept on adding until I was like
I
fucking
mean, it's
30
fine.
minutes down.
I
But
just can't do it. No,
anyway,
it's no biggie.
another candle. This was sort of a initiative. I was looking for a distribution stage. So I was looking for a very fast movement down into this price target, which I did not get. You can see a 5 minute candle. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 5 minute candles so far. Basically an hour we've been sort of chopping around my entry until one 5 minute candle decided to stop me out. And this was this was a stop out that was okay. It was sort of a normal stop out. This was my first trade of the day. I wasn't going to take any trades. I wasn't making a lot of the psychological mistakes, but this is something that I want to outline because this trade is actually, it goes very deeper in the mistakes I made later on. So a couple candles later, this was my stop out. I'm stopped out. We see a 5 minute candle sort of moving in and out of this fair value gap, maybe retracing. And then eventually we get more of that fair value gaps forming. So we have bearish fair value gaps forming, so aggressive move down. And then eventually we see a big movement into this price target. So stop me out, like probably an hour later, and then it continued to my price target. So I'm just going to outline some of the mistakes and then throw it to VJ. As you guys know, if you guys are in this trash trade, world of ours, you guys sort of know the drill by now. And this was one of the mistakes that I sort of commonly make, where I go to a 12-hour time frame for a 12-hour price target in the form of here, and then I look for a 5-minute retracement. And that's a problem because when you're going for a major, this is what I believe the problem is, but of course I want to hear VJ. When I go to a major a price target like this on the 12-hour or the 8-hour, etc., and then I immediately go to for a 5-minute, a small minuscule 5-minute retracement like this, it's sort of giving the initiative where I want a reason to enter. I am going to go to the micro time frames to make a whatever entry. So that was sort of my mentality. If I would have been more aware of those medium to higher time frames, like this hourly, for example, I would have seen the retracement into the 618 from a hourly leg from high and low, sweeping this candle's high as well. So I was really missing the overall, the big move because I was stuck to FOMOing in on those smaller time frames. Just want that entry because I'm so confident in that price target. So that was sort of the trash trade. So I'm gonna give it to VJ and see if he can debunk. VJ debuncation. VJ investigation.
Finally, this guy stopped talking, right, guys? Oh my god. No.
Cut out.
First of all, wait, did I cut out?
No, I'm gonna cut you out in the editing. That's what I mean.
I'll cut you.
Okay. Pause.
With a knife. Okay, so remember I was laughing at this?
Oh no.
Initially? No, it's okay. The reason why I was laughing was your trades, which is probably a good thing. I wasn't sure how this was going to end, but they have a similar setup. You almost always have the relatively equal lows and the 618, and it's almost always a short too. I don't know if you noticed that.
Yeah.
And like this is like a very maybe it's just like what it is, but like it's also like maybe it's to know like this is something you might have to look in your journal that you don't do. On like where your most typical losses occur.
Mm,
Okay.
okay.
So like one thing, and so this is actually a very, very interesting issue, and this is similar to an issue that I have that caused me a lot of losers that I sort of really unlocked yesterday. And I'll try to share it here. So I too do the same thing, and I think I was mentioning how I'd be like too higher time framed, and then I would zoom in and I'd start off too zoomed out essentially and be
Mm,
expecting certain things to happen rather than looking within the time frames I can make the trade.
yeah.
You were zoomed out just fine, but when you zoomed in and you were looking for the entry and trying to get into the first most pertinent entry, that's something that I do as well. And it's a very bad habit because price takes a while to turn around and to fulfill unless there's news or something major. It rarely just like goes hits a level and bounces off, and just doesn't give you anything else. It usually turns around like a car. It takes a little bit, maybe like a tank even on the bigger moves, right? And um, so one of my major things that I tend to lose on is like entering too early, zooming in too low, and then expecting something to happen. Because in reality, even so, this was like a higher time frame idea. Let's say you were looking like you should have been looking at the hour, maybe you're looking at the five, whatever it was. Um, that's going to take a little bit of time to turn around, at least like 5 minutes probably, or something like that, maybe longer. And so what you normally happens, just like in reversals on external, like on highs and lows, is that in this case, like it set up some highs, and then it re-swept them, and then it turned around in that PD array that you're looking at. So like the PD array that you're looking at in that general area was sort of correct. Maybe you brought the fibs down too much and you weren't really looking, and that's sort of why you have to check multiple time frames to sort of see if your idea aligns in all of them.
Mm-hmm.
Um,
Yeah.
but the other thing is this idea of external and internal liquidity sort of being taken. So I taken a loss yesterday, and I was wondering what's up with the loss. I asked Tom, who we always talk about, has been on the show, um, on what happened, and he was like, "Yeah, took these internal high sweeps, and then did this thing." And I explained everything else. He sort of got what I was talking about, and we sort of came to the conclusion like I entered in like a consolidation, expecting distribution, which was true. But one thing that I realized, like when he was talking about the internal external high, I sort of like thought about it through the day and then focused my studies on it a bit. And I realized that some of that early entry stuff is based on like getting the internal liquidity swept, but then expecting an external liquidity target.
Mm.
Okay. And in your case, you saw that previous tap of the fair value gap, you entered on the next one. And that's a small time frame internal liquidity sweep of a PD array that might be valid, but why would we expect it to do much more than to go for the internal lows or the internal liquidity that's there? And as if you notice, it sort of does that. Your entry, it was green for a little bit. It got into those PD arrays and those lows that were the closest, but didn't really go. But then what price did was it generated liquidity where you were entering on, and then re-swept them in a more ideal higher time frame area, and then made a real reversal.
Mm.
Right? And then essentially where you entered became a type of external liquidity in the smaller range. but then your 60, your OTE entry in the bigger range, combined with that internal liquidity being swept, allows the other side of the range to be taken out fully.
Yeah.
And when you jump in, and let's say you didn't get there was an external high that was there and it didn't get swept, you can't expect much more than those small internal lows to get taken and
Mm-hmm.
then to possibly swing back. Sometimes it will go all the way down, but like that's like 10% of the time. This is what I was telling, Bam today because I realized it and I was like, oh my God, this is why I lose. And when I re looked at my crude play, I should have got in earlier on a lower time frame, but I should have got out way earlier as well, close to where I was sort of entered. Because why would I expect it? It did sweep some highs, but not the external high of the range. So why would I expect the other side? I'm praying, hoping, confusing myself without realizing this is an internal high of this range. These are the external highs of the range. Ideally, I'd want some external highs to be taken so that I could get to the other side of the range. And so they had to manufacture that. They manufactured a new range, and then it got sort of taken. And you can see that sort of did a three drives pattern, so that didn't need anything else to sort of go around. And it's all in the same area, right? But you were just a little too early because if you go there, you're like, oh, I can't expect it to go all the way down there quite yet. And then it does that and then displaces the other way. Now you might. It still might not be enough to get all of the range, but in the OTE range, if it picked up enough of the internal liquidity on the way, sort of, you're okay. It doesn't need to always go up to the high and grab, especially in a directional day,
Yeah.
right? If we're range trading, then it probably does. If you grab on the internal range within the range, then you shouldn't expect the other side of the major range. You
Absolutely.
saw me and Babe sort of trading the range today. That's sort of what we were doing because we had honestly talked about it, and I was way less confused on when I should be in and when I should be out.
Mm-hmm.
And I think that's primarily what this is that you got in before it was there, and honestly, it's because you're worried about missing the move,
Yeah.
but you did, because yeah, in the initial entries, the fast entries, you feel like you need to get in there and you might miss it. But if you just look at that, where the setup was, like that could still be going up or going down. You don't really know. And until it sort of does that U turn in the fair value gap and starts inverting some of the PD rays, can you be more confident?
Yeah.
Or
Okay.
even when you get those sweeps and then that next candle, how it just comes down like that, you're like, oh, okay, these are probably better because at least we have these highs to sort of go. There's like sort of, I don't know, like this is something that I realize like I lose on a lot myself, and it's something to watch out for to
Mm-hmm.
understand which liquidity you're playing from.
Yeah.
You know what I'm saying?
Exactly. I think it was more of see I can understand the like how I could have been relatively like early I want to say, but I think the main fault for this trade was the jumping of time frames because I had a
Mhm.
big higher time frame bias, on that. I'm just gonna do the 4 hour just for the sake of this for the sake of this, where I see some great price targets, right? I see relatively cool liquidity on these big 12-hour lows. I know eventually price is going to get back down there, right? As it does most of the time. So as soon as I go from the 4 hour and then I go jump right to the 5 and look for a micro retracement somewhere into here and not taking into account the whole daily range, that's more of the problem that I feel I made. I went from the 4 hour to the 5 minute and not from the 4 hour to the 1 hour. I should have went to the 1 hour and looked for a 1 hour 618. I should have remained on that higher time frames to catch a higher time frame retracement for that higher time frame price target.
Yep.
Unfortunately,
Yep.
in this case, I feel like I decided to rush in, and it had a lot to do with sort of how I position myself for the day. Because yes, as soon as you see that that shiny price target, it's gonna hit. As soon as you have that bias and you're very strong and you're very passionate about that price target, you know price is going to get there, I'm going to catch an entry, I got to get these points, etc. As soon as you have that shiny object that you want to chase, you start automatically starting to make excuses for the entry. This was a great example of how I just decided to make an excuse, right? It's not the hourly retracement like it should have been. It's a 5-minute retracement. It's a 1-minute retracement, etc. All
Yeah,
of this,
which would be fine if your targets were based on smaller time frames. But
exactly. And in this
yeah,
case, I feel like that 4 hour, that big higher time frame price target should have had a higher time frame retracement. I decided to jump in, jump the gun, go straight in. What can I find straight away on these lower time frame was more of a flimsy entry. Not, yes, we saw some price reaction and we saw some lower time frame retracements, but that's not the real draw. The real draw was that hourly retracement. The real draw was my model, but on a higher time frame. And I feel like as soon as you have that mentality of trading where you decided to be all shiny and, like be so observant of that price target, you start to throw away all the classic strategic steps for your model. Like I did not go from the 4 hour to the 1 hour, 1 hour to the 15, etc. I just went from the 4 hour to 5 minute because I was just so anticipating that price target.
yep.
I was
That's
Yeah, go for it.
sorry, Luca.
No, you're good.
So this is the thing. Like, I actually made a change this week where because most of my price targets are on the higher time frame, and my
Mm,
change this week was like sometimes, but it's with far less probability and regularity. Those entries work. And the 1 or 2 times that you catch those, you forget about what you're supposed to do. We're trying to stack probabilities. And the highest probability ones, and this is the adjustment I sort of make, is I want to get in lower time frame entry models, similar to the entry model you took,
mm-hmm.
but in higher time frame, like retracement areas.
Yeah.
So higher time frame, hourly, 4 hour OTE entries. Like for example, yesterday, I think you were there. We ran up all day. Besides news, there wasn't a good entry long. I kept my discipline and I didn't chase even though I knew where the draw was going to go to all time highs, right? There was a point where we made a failure swing right at all time highs, maybe a few points away. And we went into OTE of the 5 minute leg.
Mm-hmm.
And everyone longed it. I refused to long it
Yeah.
because I was like, it will likely work, but it's too 50-50. Because if you just zoom out to the 5 minute, the 1 hour, we could retrace a long way. We don't
Absolutely.
have to hit that now. This is a weekly draw. And yeah, this could work now, but if you looked at the 15 minute, the 1 hour, whatever, it's the top candle. You're buying at the fucking top. And it's so likely to lose. I mean, we already lose trades where we think we're stacking the probabilities. There, I already had been like, yo, it's not in the higher time frame retracement area. This is not good. I at
Yeah.
least want like a 15 minute or an hour to be like, I have more room, more RR to play with. Even if it's an OTE, like if it's all the way up there, if it rather than let's say it had retraced into the 618, the OTE area of the hourly into a fair value gap, and then it turned around and gave me a 5 minute break of structure model. I'm in that.
Mm-hmm.
That's giving me what I wanted. I'm sufficiently far away for the trade to make sense for me to easily get my trims off and not have to fucking rush or sweat. So that's like I'm like yeah, unless it's a higher time frame area to trade into, some of these trades are just gonna have to run without me because too many times I get in there and then you lose and then it ruins your conviction in other trades where you should be holding for the target, you should be doing this and that, and you mismanage, you put yourself, well, you do a bunch of different things on good and bad trades because you take those trades.
Absolutely.
And so it's not even worth it. Another thing, by the way, the first point I thought I was going to make is when it makes equal lows like that, guys, you want to check for SMT. If the
Mm-hmm.
other one took the low, then it is going to have at least a higher time frame retracement.
Absolutely.
And I bet you if you looked, I think this is Nasdaq, right?
This
If
is, yeah.
you if you looked at ES, I think there was an SMT at those lows. So then it's not going to come back soon. It is definitely at least going to go to a higher time frame reversal area, if not just leave.
You know,
And the SMT would have made me a little bit more worried to short until it got to the higher time frame area.
absolutely. Yeah, I think
You
that
know,
was
so that happens a lot. And then people will be like, equal lows, keep shorting. And they will just short while it's going up like 150 points.
that was definitely another mistake where I wasn't 100% aware of um like ES basically. I like to be very fixed on NQ and just trade NQ and just go for it, which it works. You know, I find success
Yeah,
in
it can
just
work.
sticking to whatever you're trading, if it's the Nasdaq or ES, etc. But it is also, I think, somewhat beneficial to sort of have a general market knowledge before you place that specific NQ trade. You should see how the the S&P 500 is acting. You should look at CL, you should look at Dixie or the dollar index, etc. Before you place the trade. And I feel like that's another mistake. If I would have saw that ES, which is another massive index, it's a futures for the S&P 500, it actually hit this 12-hour price target, then you're starting to second guess, well, look at this massive massive competitor in the market that took this price target, so it's due for a retracement, like VJ said. And yeah, and I think the main mistake was just my negligence of that middle time frames. Again, going from that 4 hour to the 5 minute, and just straight away looking for that whatever entry for that super shiny price target.
Real quick, because I don't think I explained it that well. SMT, guys, is a smart money concept or ICT thing that stands for like smart money tool or smart money technique. Some people also call it smart money time, where correlated or non-correlated assets, like there's a divergence. So ES, which is the S&P 500, like Luca was saying, and Nasdaq, they're highly correlated, like 98% of the time. So if one makes a lower low, especially on a higher time frame thing, than the other one makes a higher low, one makes a lower low. That is a bullish SMT divergence. If one makes a higher high and the other one makes a lower high, that is a bearish SMT divergence. Now, I used to also just focus solely on the chart that I'm trading, but now I do that, but I also pay attention to the SMT divergences as well. It is confusing, but if you can start understanding that SMT divergences happen at every key reversal, every change in the order flow, um, every continuation before it takes off, um, you'll start to be able to time a lot of your entries on the higher time frame and lower time frame better, because prices factor will often happen on both. And we know a variety of traders, Tom included, where an SMT alone can key them into a trade.
Yeah.
Um, and that is why, I mentioned it and I wanted to just go over it if no one knew about it much. It's something to definitely look at because, I used to just focus on one index. I didn't understand how people maps, other people were just on a bunch of different stuff. Now I do pay attention to like three or four, whichever ones I have time to chart, and I'll chart the other ones if the price is sort of stagnant, and then like make relatively accurate decisions, especially if they sort of diverge a little bit here and there. They can key you into a trade. They can tell you when to get out of a trade. For example, if you're shorting Nasdaq and yes did hit that low and Nasdaq didn't, and you're trying to hold for that low, you might want to exit because the divergence might mean we're getting a significant pop or reversal.
Absolutely. Hmm.
Um, so it's just something to keep aware of. Because I know Luca says that he doesn't use it, but a lot of people that are probably listening to this use indicators. Why wouldn't you use another correlated index as an indicator on when a trade might be happening and ready to go, or when your trade is in trouble if you're currently in a trade?
Yeah. Yeah, definitely. I think more. Yeah, absolutely. I to be honest, I'm gonna be very honest. I thought it was SMD for a while, because then I would actually know what it meant. Smart money
Wait, you thought it was
divergence.
what?
SMD.
SMD, like suck my dick? Oh man, got him
Wow,
again.
you got me. No. I'm actually being serious. I wasn't trying to set you up,
Yeah.
but
So, you thought it was smart money divergence or some
I
shit? What
thought it
you
was
think
smart
about
money
that?
divergence for the longest time.
That
Like,
actually makes more sense. That makes the most
and
sense
then
to me.
I heard
That's so much
SMT and I
better.
thought that was something else. So
Yeah. Okay.
I didn't 100% know. So yes, the divergences in smart money concepts is called SMT stupidly. All the fucking smart money and ICT fucking names are dumb. Not even gonna lie. So
They are pretty dumb. I mean,
this
consequential
inefficiency,
approachment. Like, let's relax,
price
dog.
magnet, gap, etc. Yeah, it's just a lot of not. Well, I mean, they're great. They're great concepts. I just think they overcomplicate it. They like to, boost the ego a little bit. Whoever created it, win quick ICT. Anyway, so that was more the moral of the episode, which was the going straight from the higher time frames to the lower time frames and settling for those super small time frame entries for that big, higher time frame price target. And it's also about being unaware of SMTs. Ugh.
Yes.
And other markets um, like S&P or whatever it is, Dixie, Russell, etc. Whatever you like to trade. So yeah, I think it was a good trade. I unfortunately these mistakes I'm getting better at because now I'm starting to tie in more of the timed liquidity for my trades. For example, this 618 hit on the higher time frames. Again, this 5 minute candle right here, the high of this 5 minute candle was a start of a 30-minute candle. So that was a 30-minute candle start, which ended up getting swept, etc. So I'm trying to be more
Is an hour
aware.
start?
I'm sorry.
Is an hourly open too? That says an hourly open too, or just
It
a
is
30?
not. It's a 30-minute.
Okay.
Um,
What time was it? What time did that reversal happen?
this reversal happened at around uh one
What time?
110 to 150 or 145, which sounds like a macro.
Okay. So 1:30 is the start of the afternoon session. Today when I took those longs, I took these longs on a range. ES and NQ SMT. It was a range day, traditionally a bad day for me, but I realized how to trade them better. They SMT, they hit a standard deviation, and also I got in towards the end of an hourly candle, which is not great. Learned that from Romeo. And so it's better to enter on the beginning. And what happened right at 1 o'clock? It just took off. Hit a fair value gap and says, see ya. But before that, it was waiting, chilling. The times do mean something. Remember, we used to always watch the end and beginning of the hourly candles, but have no idea why or what or how to utilize them.
Yep.
We would just notice the action. We would notice the action at the end of the fives, at the end of the 15s, and the beginning of the 15s, and the
Mm-hmm.
beginning of the hours. And we're just like, does no one know this? No, that's actually, we need to utilize that to our effect. The end of the hours tends to be the close. And so think about the price. Let's say the price is bullish. It's going up, and at the end of the hour, it pulls back for no reason to rebalance that candle.
Yeah.
And then the next candle pulls back a little bit more to make the bottom wick, and then pushes up, probably offering entry, and then it's gone. And then it's past the end of the last candle, and then it keeps going. And that's why, like, if you sort of think like that, the beginning of the hours are better. And if you notice, the macros are the beginning and end 10 minutes of every hourly candle through the
Absolutely.
day. ICT only gave us a few, but then in a more recent video this year, he said it's every hour. And if you play the PO3 of every hour, which is the accumulation, manipulation, and distribution of every candle, accumulation is at the open where it starts, the manipulation is the wick, and the distribution is the rest of the candle usually. And so, like, these timing, like, people will always say, you'll hear a lot of argument about, is price more important or time more important? Because ICT would say that time is more important. And anyone who says it's just price, go ahead and blindly buy whatever level you have whenever it hits throughout the day.
Mm-hmm.
And you will notice that sometimes it will work swimmingly, and most of the times it will just fail because the timing is important. Why do people try to get their trades in New York Open? Why does Asia tend to not distribute? Because that's part of the daily power of three, the accumulation, manipulation, distribution. Everything is sort of timed. The money that is dropped off to the institutions are timed.
Yep.
The system just changed from T2 to T1. So it's only 1 day to fucking clear orders or whatever the money. I can't remember exactly. But like when you realize that everything is sort of on the time cycle and you're just worried about price, well, everyone who has the money that you want is worried about the time.
Absolutely.
So get on fucking board or just get wigged out for no reason and then watch in 10 minutes as your trade works, which is exactly what happened there. The time wasn't ideal. You were in lunch macro. If that was at like 115 to 145 when it hit the top, it flattened out. And then 15 minutes into the session start, it started to distribute.
Yep.
Sometimes it happened right on the dot at 1:30. Like the last couple days, right at 1. The lunch macro ends. There's that 30 minutes before the afternoon session goes, and it would just sweep the lunches and go. And that's what happened today.
Absolutely. Yeah. And again, I think macros is also a whole different discussion entirely. Macro times, stuff like that.
Just remember the beginning and end of every hour, and remember 3:15 to 3:45. You're good.
Absolutely.
That's pretty much all.
But yeah, good episode. I think good trade, good lesson. So, and listen, guys, we need some money for real. Like we got a bio link. We got a fucking bio that we've been putting in every single episode.
Can we even promote that? Because like we're not. That doesn't give us money. We should just start a GoFundMe. Be like,
oh, we need a GoFundMe. Fuck. Okay.
A Patreon maybe. We got to set something else up because this shit is ass. I mean, we love you, TOPSTEP. Like, I'm not gonna change our accounts. Like,
fuck you, TOPSTEP.
But the link ain't working, guys. People are clicking on it, and it says that we get no conversions. I know people are using the link. I know people on the accounts. So when we try to get it fixed, they don't really know how. I would highly still recommend TOPSTEP. Don't get me wrong. I'm probably going to trade with them. I love the TOPSTEP X platform. So click on the link if you want to use it, please. But fucking Cash App, fucking Luca.
Yeah, GoFundMe. We're gonna have some shit up and running for real, like begging me and Beach. So, and if you guys want to support, please like, subscribe, comment, just interaction. You know, that's how the YouTube algorithm works. If you give us some interaction, some sort of attention, they're gonna push this on to more, more home pages, more people, more eyes, more exposure, etc. So we would love a little like or a little subscribe. That'd be amazing. If you guys stuck to the very end, we appreciate you guys a lot for your attention, for coming along the ride. Me and VJ were putting in a lot of work, a lot of effort, a lot of back testing, a lot of stuff like that, just for sort of our development as traders. And if you guys want to come along, guess what? You guys can. So we appreciate you guys. And if you guys want to keep up with the episodes, of course, Monday, Friday. And yeah, we love you guys. For real.
We love you. For real.
100%.
Thank you so much for listening to this crazy show by the fucking leprechaun and the brown fucker.
No, there is no brown fucker. Cut him out. For real.
Oh, yeah, that's right.
Yeah, okay.
Okay. Hell yeah. We're killing it. Love you.
See you guys. See you guys. Bye-bye.